And welcome back to another episode, another Sunday. All right, Sunday fun day. Hope you guys are doing well. I know this is a very impromptu kind of live stream. Honestly, I am using this time to kind of test StreamYard. So I just got StreamYard, so I'm testing. I have been using OBS in the past for pretty much all of my streams. So this is going to be all new for me. All right, I am testing everything out. I'm still getting used to the hotkeys. Still kind of getting used to everything else. So this is more or less just kind of a chill day, guys. Like really chill. Got not a whole lot to talk about. I think there was actually some breaking news that I had posted in my Discord, and that news was let's see real quick. Yeah, the Trump administration is poised to inject 1.6 billion into U.S. Rare earths, all right, in exchange for a 10% stake. I think that is the biggest news of the weekend. Of course, it would happen over the weekend. It wouldn't happen on a Monday, right? But we saw the stock USAR spike about 20%. Absolutely insane. All right. So again, this is StreamYard. I'm using StreamYard today. So this is all going to be new for me. I might have some technical difficulties. As a matter of fact, can we do a sound check? Can you guys even hear me? I'm assuming you guys can. So we have Dividend Sith. Hey, welcome. Execute Order 66. Absolutely. And we all know that good soldiers follow orders. All right. USAR fleet came to the USA. Yeah, I talked about that, right? I talked about a carrier strike group coming into the Gulf, right? I talked about this on an earlier stream. And while Trump was like, oh, you know, we're not going to really attack. Well, why the hell was a carrier strike group on its way over there, right? And, you know, I have a few friends that are still in the area, right? A few friends from my old job, and they're all telling me like, hey, we're still on high alert. Like, you know, screw what the news has to say or what Trump is saying. Like, we're still on high alert. So it is real, man. It's real out there. All right. So, hey, appreciate you guys for joining. I see we have, aside from Victor Sank and Dividend Sith, we have Jared Johnson. Hey, welcome. I don't think I've ever seen you on the channel. So welcome. Phil M. Hey, appreciate you joining us back. All right. Again, this is more or less going to be kind of a chill stream. Again, this is I'm setting up. I'm really tardy to the party here. I'm using StreamYard as my first time. So I think it's going to be pretty cool. So I'm going to be fiddling around with stuff here. Oh, look at that. Look how freaking fat. Look at Eugen getting all freaking pro over here. All right. That's pretty cool. That's pretty cool. So I am just, yeah, like this is all new to me, guys. Like, I try to do this in OBS, but it's like, it's a little more work, a little more customization that has to go into it. And I don't want to spend the time doing it. Even if it added a little more production value to the show. But yeah, so let's see if we can switch screens. Okay, so we can see screens. All right, we can see everything. Yeah, so I saw that. I did see that someone had mentioned that the S&P 500 is having a red day today. I am looking at the futures. And yeah, you guys can see here, we're already down almost 30 basis points for the NASDAQ, down 12 basis points for the S&P 500. All right, so I'm going to do something kind of crazy here, all right, because I like you guys so much. This is going to be really crazy. All right, give me 1 second. Let me see if I can even get this correct. Okay, so again, I've never done this before, but if anyone wants to come on to the chat, come on to the live stream and actually talk with me, and maybe we can talk about whatever you guys got on your mind, there is the link to join. Okay, there is the link right there to join. I'm going to drop this stream, if I can, into the Discord, because I don't think I let the Discord know that I'm live, but they probably are busy today anyways. So let's do that. Let's do that. Oh, look at that. Look at that. Coffee with Brad. All right. 2 top ETFs. Yeah, if you guys haven't checked this video, I haven't posted it yet, but this is look at me with my big head. This is a video that I just did with Gary Gill. I really recommend you guys check him out. He's up in Canada. So if you're Canadian, you follow the Canadian market. You know, he's all involved with it. He also has a lot of good kind of gems. Gary Gill's an awesome person, awesome human, Really like talking to him. I mean, we cut it up pretty good in that last interview. So I've done 2 interviews with him now. So he's a friend of the channel for sure. Let me get up in this Discord real quick. Did I paste that? There we go. Let's see. Okay, so we got that. We got that pasted. Let's go back. So let's see what we got for news, at least. Odds of a government. What? How did that happen? I thought we just passed the odds of a government shutdown rocketed higher on prediction markets after Senate Democrats vowed to block a $1.2 trillion funding package that includes appropriations for. Come on, guys. Come on. This is like, we're just adding more money onto our freaking deficit. We're just adding more money onto our debt. Like, that is crazy. Another $1.2 trillion. Absolutely ridiculous. Oh my God. Absolutely ridiculous. If we have another government shutdown, I could probably see the markets, because last time the markets didn't really care, right? The markets didn't really care. It wasn't a big deal until the numbers started to get really, really like important, and we really needed those numbers, right? So this government shutdown, the Treasury was shut down around the same time, and one of my hypotheses is that the Treasury, because they weren't moving money around, was part of that huge sell-off that we had, back in October and into November. That is at least the kind of the thesis I'm going with. All right, so I see we have someone at backstage. Let's see. So Victor Sank, hey, appreciate you joining. Let me get you into here. I don't know if you can you hear me, Victor?
Yeah, I can hear you.
Hey man, welcome to the show. All right, this is the Sunday coffee edition. Just invest and chill.
Hey, I'm from Vancouver area, Canada. So we have some almost 6 p.m.
Oh, it's only 6 p.m. Okay, yeah, I am gonna try to start my streams at least for this coffee hour, at least for this market, like because the overnight markets are open. I think next time I'm gonna try to shoot for something a little earlier, maybe like 7:30 or something, so we could see it as the market opens. This is crazy though. I did not even see this piece of news until now. So what are you investing in? What are you doing these days?
Oh, I just started investing this summer, and I started in August, not knowing much about market, and I was just watching you guys, trying to see what you're buying, and I bought a little bit of everything because I know the best way just to test myself. So I bought like 40 different ETFs, a little bit everything, see how they perform. What I was performing not great, I was trying to sell, but I entered at the point where market was really good up to October.
Yeah.
So everything looked like amazing. I was like so happy, like, oh, I just started, everything just goes up. And then November came and everything went rapidly down, and I had to rethink, okay, I need to study. So now I'm super cautious, just learn, study more every day. And thank you for sharing all the info and going with live chats with other people and sharing their stories. It's a big deal. So thank you so much.
I appreciate that. And yeah, this like 2025, I think was a huge learning experience for a lot of people. Like everybody looks smart in a bull market, right? Like you could throw a dart at a dartboard and hit a stock, and it's going to go up, right? For the most part. Yep. Just everything looked good. And then these sell-offs, especially for new investors, they kind of rattle new investors. But it is a good learning experience. I hate to say it. Like I learned the most when bad things happen. It didn't matter if I was investing in real estate. It didn't matter if I was investing in the stock market or, just whatever, like even in, shit altcoins, crypto. These you should look at these as like an opportunity, yep. Of course, because now as you said, you're learning more, you're doubling down on stuff. So that is good, right? So because this year is going to be even more crazier. So you get to live through this crazy time and get to see it, right? See it firsthand. And I'm assuming since you're starting out, you know, you're probably on your growth phase. You know, you're building your portfolio. So I mean, that's good, right? Like this is an opportune time to pick up shares on the cheap, even if we have a really bad market crash, right? 15-20% on the index or something, which I don't know if that's really going to happen, but that is just an opportunity to buy. Right now, you got to be careful with the high yield stuff. All right, be very careful.
Already tried it, yeah, of course.
It was a nice experimental phase, right? But yeah,
Yep.
be very, very careful with that, with the high yield stuff. If like I tell the new investors, like people who don't really have a whole lot of like you know, net worth, that if you're starting out in the stock market, I mean, you really shouldn't even be fiddling around with this garbage, you know, the high yield stuff. You should wait until you get to like a certain threshold, you know, like have a goal and get to like 100,000, right? That's your goal.
Yep.
Get to $100,000 in net worth, right? If you haven't achieved that yet, or 50,000 or 10,000, get there first. And then when you get to these larger numbers, 75, 100, whatever, then you can start fiddling around with this stuff. But yeah, I think a lot of investors had learned the hard way this year. Like high yield sounds sexy, sounds fun, retire early, live passively or live off passive income. But, you know, people are learning the hard way. Like this stuff is not just free money.
Yeah, I was lucky to watch you guys sharing your bad experience, and I was just on time shifting my funds, whatever income I was getting and my personal income, into more durable broad index funds, and that helped a lot to minimize my overall losses. And I just compensated. I didn't sell anything. I just start to buy more and more quality stuff. And whatever I bought, small pieces of like yieldmax and granite shares and all that stuff that was showing really good up till October.
Yeah,
I was looking into graphs. It was like 70% increase of value. Like, okay, that looked like really good. But then after November, like, okay, that actually works only after very strong bull market, and in a regular market it doesn't work almost like at all. You sit either in a zero or you lose money, not even any profit. So once again, I invest in Canada, so I buy Canadian mostly index funds now, and I'm into MSTR, so I buy mste is Canadian one, a little bit income, but I already had big chunk into it, so I'm just lowering my overall price, catching up, and I did drop my overall price significantly, so I'm proud with that, and I just gonna keep buying MSTR on the drops, and if it's gonna start growing, I'll just gonna keep it until it shows some great result, and other than that, I'm just gonna keep buying index funds. Once again, I have like 60,000 Canadian invested. Okay. So yeah, goal obviously is first 100,000 and go from there. And yeah, that's a little story. Thank you for the opportunity to share. Yeah.
Well, thank you for joining, and that's awesome, man. That's awesome to hear, and glad you joined. You're the first one to join the stream, man. The first one to join the chat. So, you know, I do appreciate you, really. I do appreciate you a lot. So thank you. A lot of people get really shy. You know, they don't want their voice and everything heard on stage. So I totally get it.
I have some YouTube videos, and I produce some stuff just in other language. So I'm not shy to talk or to make content. So I know how difficult it is. That's why I appreciate your work, because I've been doing videos. I know how long it takes, how much time and preparation for even small video. And if you want to make quality content, if you want to share something that has some value, it will take you a lot of time. That's why I do mine stuff very cautiously, and I even pause some of my creation, because I just don't want to pull out junk or talks about nothing. I just not gonna feel nice. And you sharing recent news, you talking to new people, you showing your experience, and I think that's a high value content for me, at least. So thank you so much.
Well, I appreciate it, Victor. Again, thank you so much, man. We're gonna bring
see if
Go ahead.
somebody else wants to. I'm not sure if
Yeah,
somebody
we're gonna
wants to
bring
do that.
Dividend Sith onto the stage. I see he's well, he or she, I don't know, but we see them waiting in the back. So I'm gonna add them here. So let's see what we got. Dividend Sith, hey, welcome to the channel. Welcome to the stream.
Happy to be here. I am a him.
Okay. What's up, man? So first off, it's a pleasure to meet you. I've seen you comment a bunch, not only on my streams but also my videos as well. I haven't done a video in a very, very long time. I think I'm moving towards more streaming than anything. I enjoy it so much more. But yeah, man. So what are you investing in these days? How are you setting up for the week?
Well, like I said, I was the one that said, you know, I use Robinhood, similar to you, and you know, soon as I know at about 6 or 7 o'clock Central Time, they're going to switch over because I'm in Central. They're going to show what the pre-market is, and I lost almost a whole percent. Went down, you know, lost $200 as soon as the market hit. I was like, oh, not again. And I started my new investment journey this time around, like last summer, May or so, and I went all high yield. I was like, you know, I'm not doing the S&P, I'm not doing the Qs. I'm just gonna go. I start off with yieldmax, and of course all that trash. I got rid of that, and then you know, roundhills came about, but I was using M1 at the time, and M1 didn't have any of the roundhill weeklies at all until October or so. So then when I switched over to Robinhood, of course I can see everything. And it's those two platforms are so different where, you know, M1 has a nice interface, but it's not up to the second. And you only can trade 2 times a day, and they don't update their tickers, you know, right as stuff happens. So I didn't really, I had used them for years, but now that I switched over to Robinhood, it's such a different interface of, you know, this just happened, this is updated. You can buy, you know, anytime the market is open. And some things in 24-hour market, that's not an option with M1. But
yeah, I used to be a big fan of M1. I used to be a real big fan of M1 Finance. I still am. Like it's good for like I want to say like the basic investor, right? Someone who's just looking for like ETFs, build out a nice portfolio, you know, like it gives them a nice visual. They're adding all these tools to M1. But yeah, just like you, I was kind of like upset that they weren't coming out with their ETFs fast enough. I think Darth Dividend, I think that's his channel. He does everything off M1 Finance. He seems to make it work for him. But me, because I wanted quicker access to stuff, and you know, especially stocks that were not listed on M1, I ended up moving everything to Robinhood. I used to have like 2 portfolios when I first started. Like some of my earlier videos, let's see, some of my earlier videos, like I used to be on M1 and Robinhood, and then yeah, I moved on to Robinhood because I wanted not only access to the ETFs and the stocks as they come available, but also I think like the margin was better. The margin was way better on Robinhood versus M1 Finance. But I like with M1 Finance, like you're given a bill, right? Like a bill, and you just pay. You could pay that bill like it's versus Robinhood, where there's like a difference in how you could pay off the margin. Like it was a slight difference, but it was nicer. But yeah, my big portfolio change right here. Yeah, I moved off of it. But no, that's really cool. So yeah, getting used to Robinhood, I will say they really gamify the hell out of it. So it looks like, you know, bright lights and neon lights and all this stuff, and it looks really cool. But it's an easy transition. I think it's an easy transition.
yeah, I agree. I like but the M1 feature where you see what your margin used is, and you can either, if you got $100 you're going to put in, either you can pay the margin down or you can put it in the stock, and it's going to, of course, still increase your margin one way or the other. So that's not an option on Robinhood. But to answer your first question, I basically restarted after, you know, I put $3,000 or $4,000 in the Who and PLTW, NVDW. Those were my main core positions, and then whatever reason I had bought like 6 or 7 yieldmax, and I only have one, which is CHPY, and I had it since May. And, I wasn't buying that much. I bought like 4 shares to start. And then every, now and then I'll buy another one. And now that, it's ripped the last month and a half where it went from basically hovering at 55 to 60. And the last couple of weeks it's paid out 52 cents per week per share. So I still don't have no, I'm not doing your 300,000. Like I said, I started totally from scratch in May. So I've surpassed the 10,000 invested threshold now, but now I have, a share of IVV. I picked IVV just because I didn't want to say I was NVOO. And then I did more research and I put SPY-M in my Roth IRA just to, I don't want to say I'm messing with VU just to be an ass, I guess. And but SPY-M,
you don't want to be basic. You don't want to be a basic investor and just go all in on VU.
Yeah, no, I don't want to do that. But SPY-M, it actually is the cheapest at 0.02 out of all of them. I've seen this one video somebody with AI made, and they say, hey, this is actually the cheapest version of the S&P 500. Does everything else everybody else does, but it's just cheaper. And of course, then I went with QQQM, and biggest growths are my biggest growths are SMH and SOXQ. So
nice.
I know you're pretty big on VGT, but I was like, but it's hard to beat this just the straight semiconductor growth ETFs right now.
Yeah, I'm big on VGT because of the bigger, like the higher amount of diversification it has, and it has like it doesn't just have semiconductor companies. Like that chart for SMH is pretty damn nice, right? Like we like that chart. But for me, the reason why, just me personally, why I didn't make that, well, one, I didn't even know really about SMH in the beginning, right? I didn't really know about it. So SMH, like the drawdown periods can be pretty violent. Like whenever there's like a really big drawdown, SMH can have a very violent, downward trend. I wanted something a little more stable, especially since I'm using so much margin, right? So that's kind of why I opted for VGT. It just made more sense as kind of like a core to the portfolio. But I mean, look at that chart. Like SMH is absolutely disgustingly beautiful.
I agree.
But I can't see SMH dropping. I mean, I don't think any of us can, especially if you're a big believer in the AI thesis, CapEx spend and everything else, and AI data centers, blah, blah, blah. I can't see SMH having a drawdown like a severe drawdown. But, for me, again, just me being heavy in margin, I wanted something a little less rocky, but that still has, some umph, and VGT compared to SPY or, the S&P 500 or something like the NASDAQ 100 still has a better performance. But I had VGT during the April sell-off, and man, it was horrible. Like it was really horrible. Like I was like, damn, this sucks. So if I held SMH, I would have been probably crying in my sleep.
Yeah, but the comeback would have had you doing a happy dance, because that thing is not playing. And
absolutely.
Yeah,
like the shitty thing, and I hope I don't get delisted because I said this. The shitty thing for me was when I had VGT, right? Because I had split brain portfolio at the time. I had some on M1 Finance, and then I had the high yield stuff on Robinhood. Like I could not put any money into VGT because all the money was already in xdte, XPay, and PLTW and VDW at the time. So I had no dry powder. So I had to suffer pretty much through Liberation Day, basically from February all the way down to April 8th. I just had to eat it. And it was such a crappy ride because I was like, man, if I had the money, I could have dropped it into VGT. If I had moved the portfolio off of M1 Finance much earlier into Robinhood, and then, degened and then got a lot of margin, then I could have probably put more money into VGT at that time, but I just didn't have it. I mean, look how sick that is, 27%. That was, oh my God. See, but SMH was down 32%. That's enough to roil anyone. So are you still in high yield stuff? Do you still have high yield products?
Yeah, so I have well, I think they call it a degen attitude. So I'm still in who. I haven't sold it. I did sell nvdw. I'm still in. I got 15-20 shares of pltw. But I want my biggest. I got 4 that I'm still big in, which is Maggie, Chippy, Blocks. Because I had every day set up where I was getting paid every day, and that shit didn't work. But Maggie, Chippy, XPD, qdte, and my new love is K Yield, the Curves fund. And
yeah, the curve funds. Yeah, everyone loves curve now. All of a sudden, they've always been good. It's just nobody liked them because of their yields. But now all of a sudden, oh, they're the best, right?
And I actually list Goop, their Google fund.
Yeah,
because that's like my number 1 single stock that I own is Google, and
nice.
Goop, because it literally only pays 12%, but their price appreciation on the NAV is awesome. So I don't even really count that as a dividend payer. I just count that as another growth fund because that's mainly what it's doing. And
go ahead, continue. I'm sorry.
But my core funds, of course, IVV, SMH, SOXQ, and QQQM, and then I have I don't have the same principles as you as far as the core in your satellites, but then my next layer will be TDAC, XPay, TSPY, and then QDVO, and then my couple weeklies that I have. So that I'm still like, damn, I want to do too much stuff that I can't trim it to like 5. So I'm like, all right, this 3-layer. And I've posted a couple things on my social, like, hey, this is what I'm doing. And now I'm like, hey, I think I'm like tonight I was listening to, I was like, I got to get, take another $1,000 and go buy FDVV or the other one I told you about, which is FYEE from Fidelity. And just, it's going to be hard on me, but just be patient and wait for the quarterly dividends. And, but I like getting paid every week. That shit's awesome.
Oh yeah, it's it's the dopamine is so good, like but that was I swear that was such a that was the theme all of last year, not all of last year, but for a majority of the year for last year in 2025. Everyone was like, I want to get paid 5 days a week, right? And I've talked about this where they were just buying shit that they didn't really understand. I sorry to cuss, but they were buying stuff that they didn't really know. They just knew that it paid on a Wednesday, right? They'd have like 3 NVIDIA funds, like NVIDIA, like MSI, or what was it, NVII, NVDW, and like NVIDIA. It was like, oh, I get paid every single day. Like, oh my God, like why? Why would you do that?
I was that guy.
Hey, I don't. Hey, it is what it is. But I'm sure. Like, do you still subscribe to that thought, like that train of thought? Like where you want to get paid every day, or did your strategy change over time?
It changed, most definitely changed over time. Now I basically I'm really about to get rid of all the weekly single leverage roundhills. And then Maggie is, of course, the Mag 7 and Blocks that just happen to land on Monday. I'm gonna be empty Tuesday. I'll keep NVII for Wednesday. I got Chippy and K Yield on Thursday, and XDTE and QDTE on Friday. And then there's one more that I'm just like, I've really been praying for it to work, and it's not working, which is the new ULTI from Rex. And I really want that one to work so bad, but it's recovered. It recovered three whole dollars on the NAV, but I just don't trust it because it's paying out 76%. I wish they would lower it just a little bit because I'm in FEPI and AIPI on their other cover calls, and those are great. But ulti when it started at 25 and it dropped all the way down to 14, I was like, yeah, I sold out, lost like $100 and something. I'm like, I just keep on watching it, praying, but it's not working. So
just got to be patient. I'm going to invite Tungsten Tiger into the chat. I think I know who this is. Let's get him in here. Hey, Tungsten Tiger, can you hear me?
Hey, how's it going?
Oh man, it is the man, the myth, the legend. You got feedback on your side? Are you on a phone or something? Or
Yeah, I'm on my phone. Are you getting feedback?
yeah.
Hang on.
For anyone who's interested in a metals ETF, we didn't cover this, but I would recommend people take a look at this one. All right, if you aren't into checking the miners, looking at individual stocks or mining companies, you can look at something like PIC.
Is that better?
Test 1 2 3. No, I could still hear myself.
Damn it. Okay, I'm gonna have to find something. Let me see if I can switch to my laptop.
All right, you want me to kick you out right now and then come back?
Yeah.
Okay. Real quick, I see in the chat we have William Landlord. Welcome to the channel. I don't think I've ever seen you before, so one, appreciate you joining, and two, let's check out your question. I want to do that really cool thing where they show the question. There we go. Look how freaking official this stream has gotten. Hi, Eugene. If you had to start over and had a $50,000 a year job, how would you do it? What would you do? So, man, I have thought about this myself. If I had a $50,000 a year job, depending on my age, all right, I think age is a big deal because then you start getting into, your risk tolerance, how far off until retirement, goals, et cetera, et cetera. All right. But if I was, I'm going to just start from 21, right? Because I think that's realistically we'll just use that as a starting point. So 21 years old, $50,000 a year job. I hate to say it, and I always will say it, but you need to get at least an S&P 500 in your portfolio as a baseline, right? If you don't know what you're doing, you have nowhere to start, no frame of reference, start with an S&P 500. You can go with something like SPY-M, like Dividend Sith had said. He doesn't want to be a part of the VU crowd. You could do SPY-M. It's very cheap. You could do it on Robinhood, get fractional shares, Fidelity. I think you can even do M1 Finance as well, right? A lot of people will say go with the SPY, right? There's SPYs, really expensive, or VU, which is also very expensive. These are all S&P 500 indexes, so they hold 500 companies, the largest companies in America. So you can't go wrong, right? So I would just build that up over time, and then get to a certain threshold. Maybe once you've built up a decent amount of wealth, right? Once you have net worth. Get it to 100K. That's your first goal. Get to 100K. If you can get to 100K with, maybe 1, 2, 3, 4 ETFs, then you can start looking at other stuff, right? You can start looking at like individual stocks, but this is your baseline. This is the beginning, right? And this is assuming you have no experience trading, which I don't even do, or no experience doing stock research, which you can learn along the way. And then take these little tiny bets here and there, maybe $15, $20 in a stock, etc. But I would always recommend people start with that. And then again, you're 21, you're getting on, you're getting job promotions, moving up, maybe switching jobs, getting more money. Again, then you can start piling in the stuff. You'll eventually hit that thing where you don't want to, like, it's going to be hard to justify buying like a t-shirt because you want to keep putting it towards assets. If you want to take on a little more risk, you could diversify away from the S&P 500. Let's say you have VU, right? And if you believe in the AI hype, the AI thesis, like if I knew now what I knew back, if I know now and, started all over, I would definitely have bought SMH, right? I held the Fidelity version of this, right? Way long ago. I didn't even know what I was buying. I just saw the green chart go up. So I was like, oh, this looks good. But I didn't know what I was doing. It was a mutual fund. So I ended up selling out of it. Like a moron. But knowing what you know now, all the access you have on YouTube, all the learning and education you can get, I think SMH would be a decent pick for a portfolio, definitely. But yeah, you could start off with the S&P 500 or maybe the QQQ, right, which is the NASDAQ 100. So it's mostly tech companies. I think there's like a 50% allocation, maybe 60%. No, I think it's a little less than that actually. But it's a high allocation to technology. So it's going to outperform the S&P 500 during good times. And it'll have sharp drawdowns whenever there's corrections, pull downs, recessions, whatever you want to call it, right? And then you can, after you get to a certain amount, right? You're getting on with age. You got that 50,000. You increased your net worth over time. You got promoted. You got new jobs. You got money coming in. Then maybe you can look at doing individual stocks or something, right? But again, there's a lot more high risk with that stuff. You have to do a lot of due diligence, and you have to be careful because my first stock pick, and this is my favorite story. My first stock pick was Sprint, and I bought it because people in the office were talking about it. And they just said, yeah, this looks like a good stock. It's going to get acquired by T-Mobile, and I ended up putting like $1,000 into it and didn't make a good return on it at all. I didn't even know what I was buying, right? So just my thoughts is all on that. So let's see if I can get rid of this. I see we got Tungsten Tiger up in here. Let's see. So, hey, Tungsten Tiger, welcome. I appreciate you for joining the stream.
Yeah, man. Is it any better with feedback at all?
Much better. I don't even hear myself, which is a good thing.
Hey. All right. Yeah, man. What's going on today?
Hold on. First off, I got to let the audience know. So Tungsten Tiger is the guy that I listen to when it comes to metals and commodities. We did a video, we did an interview a long time ago. And a lot of his predictions pretty much came true, right? And it wasn't just, these random predictions. These were, more or less, based on his research, based on everything that was happening. And you guys will notice gold and silver were not really all that talked about last year, right? Pretty much all throughout 2025 until the last couple of months. And now everybody on YouTube and their mother is talking about gold, silver, and they're starting to talk about mining. But again, Victor had told me about this a long time ago, and me being a stupid just someone who does not like gold at the time because I thought it was such a dumb asset, he told me about this 4 months ago. 4 months ago, if we look at where gold is or where gold was and where gold is today, I obviously missed the boat there. So definitely someone we should listen to. But anyways, I just wanted to give that quick intro for Tungsten Tiger. So again, appreciate it. So I don't know if you want to take it from here and just kind of
well, thank
go
you
on
for that. But again, everybody's smart in a bull market, right? Now, I don't think people have necessarily missed the boat on gold, right? I still think that gold is a hedge against monetary inflation and will continue to be so throughout perpetuity until we find some other form of transacting. So if fiat is being beaten the crap out of because people are tired of speculating on what something is worth, then I think the oldest form of monetary exchange that we know in human history is probably still a decent bet. And if people want to go ahead and hop in at $5,000 gold and they say, man, that's too high, it's gone up too much. Well, do you think they're going to continue printing money? I mean, they just did the biggest print, one of the biggest prints ever in history just this last week. They're still putting out more money into the marketplace, billions upon billions of buying our own debt, Banana Republic type shit. I mean, straight up Banana Republic. And nobody's batting an eye. Like, market goes up, people are happy. We still haven't dealt with any of the debt issue. We still have this looming trillions upon trillions. And it's not necessarily that it's trillions of dollars. It doesn't matter how many trillions it is. It could be in the quadrillion. If we were making a quadrillion a year, then it wouldn't be an issue. But that's where disparity is between the two of those. We've got money printing going nuts. We've got the guy in charge of it, which is, I mean, it's too ridiculous that the people with these names are even in charge of these things. The guy's name's Cash Carey. He's literally running away with the money. And nobody's like, hey, this is way too on the nose to be reality. We need to go ahead and do something about this. But instead, people are just looking at the market and going, hey, we're going up. Hey, new all-time highs. Hey, woohoo. But really, if anything, everybody's flat. Like, so many people don't realize that they think they're doing great. In 5 years, they're like, wow, dude, I doubled my money in 5 years. Yeah, but they printed off twice as much. So that double was nothing. And in fact, you have 5 years of lost investment time now that you've ended up exactly where you started. So if anything, it is a big pothole that people fall into as investors. I am of the mindset I have to double my money every year. I might not achieve that, but I can sure as shit put that in my brain as the goal. So my brain gets to work of going, how am I going to double my money this year? How am I going to be able to do that? Can I do that like I did last year with gold and silver? I don't think that's going to happen necessarily again with silver this year. Silver is extremely speculative. If you listen to the people that I listen to, and I know you do somewhat of Rick Rule, there's a couple of other guys who I really like. Clem Chambers is one of the guys. Clem is certainly one of the people who is kind of a little bit counter to what the average person does. Like, he just sold all of his silver, right? Rick sold 80% of his silver, because these guys are trying to impart lessons to the modern day investor, saying, hey, we know that you cannot call tops. Like, every time people try calling a top, they end up being a bag holder. So rather than going, oh, silver's going to 200, it very well could. It could easily go up to the 130 and have an amazing pullback way down because of the amount of manipulation allowed in those marketplaces. So upon speculative things like silver, where some of these other things are going, I still have a lot of faith in where these things are headed. But in terms of plays, gold is still probably a much safer bet. You're not going to see as much appreciation out of that as you might some of these other things. Like, I mean, platinum is beating all of them, and nobody's even talking about platinum really up year to date. So it's, and I think even over the past year, it was like, silver was at 140, platinum was at 147%, roughly around there for the appreciation price in it. But I mean, those things, again, markets can be irrational longer than you can be solvent. So if it's, at platinum's at what, 2,700 or so, I think about right now, it could still go to 5. It could, markets can be redonkulous, but that doesn't mean that's one of the investments that you should be kind of going all in on, right? These speculative things should have probably a little bit less weighting in it than the things that are a little bit more reassured. Like when you have central banks backing you up, buying pounds and pounds and pounds of gold, to where it's, I mean, hell, you have countries like Poland now being like one of the top 10 holdings of gold in the world. These guys are just buying up 150 tons like nothing.
And that is getting crazier. More and more central banks are buying more gold. And you had covered this last year that central banks were buying up gold. But there was also something that I think a lot of people didn't really fully comprehend. And I think it's starting to make more sense. Tether is buying a lot of gold, right? Tether had picked up a ton of gold. And I guess the mechanics behind how they're acquiring it is they're using basically the interest from treasuries, because Tether, they need to hold US treasuries. So the interest they're making from the treasuries, they're using it to buy gold. And Tether is a cryptocurrency of all the crypto, like on my bingo card, I would have never guessed that a crypto, coin or a crypto company or a crypto, project would actually own gold, which is, like you said earlier, that is what true value is, right? That is I think
real that's
currency.
Hilarious though, that it's called digital gold for like Bitcoin. And then people go, wait, but it's backed by real gold? That's crazy. I'm like, why is that crazy?
That's crazy, man. Just checking the chat real quick. So we got R14 Real says copper and platinum are what I'm anxious for as well. All right. Myself, I actually am in a platinum play, and I'm also in a copper play. So I feel that. Real quick, let's see. Oh man, started buying. So this from Tin Batman. I don't think I've ever seen you in the chat. So hey, welcome. Oh man, I started buying silver eagles back in 2001. Started giving silver to my family members for Christmas. Oh man, you made your family very rich. Let's see. Just going back on the chats here. Good evening, Randy, and writing msty on BMNR rockets. Go Bitcoin. Let's see what Bitcoin's up to real quick. Sorry to take you guys off topic. We'll get back to Tungsten Tiger here in a second. Looks like that rocket is it's not really taking off, but hey, I'm still bullish on Bitcoin for sure. Let's see. Yeah, so we'll get back to this. Yeah, so Tungsten, digital gold, he just mentioned, like they say it in the name, they're calling Bitcoin digital gold, and it's back, like it's gold. Just buy gold, right? That is essentially it. So so Victor, I mean, can you give us some ideas, like, what's going to be hot this what do you think is going to be hot this week, or what are you setting up for? Like, you don't have to give us like, the plays or anything specific.
Well,
but can you give some investors ideas of what to look out for?
In terms of commodity wise, I like to kind of take a little peek at the Chinese markets and see what they're doing before the American markets, right? They're fairly indicative of, what's going to be moving around. And lithium concentrate for the past, I don't know, couple of weeks has continued to pop up, and at like 7% on a day kind of a thing. So I've certainly been looking a lot more into these lithium stocks. Atlas Lithium is one that I've been paying attention to for today. Citadel took a large stake in their, I think it was like 9% stake in their company, something like that. So fairly sizable amount. And so I'm kind of seeing how they're going to perform today. It looks like in pre-market, they're already up 4.2%. So, 420, not a bad amount.
Not a bad amount. Did you see this? Did you see this news? This is again, this is government, I don't know, man. This is the government choosing winners and losers, right? They're still doing this crap.
For sure.
I'm happy that I have had a buy, right, for USAR last week. I'm pissed because I put a buy order in after hours for a little bit more, and then this news dropped, and I'm so pissed now because I missed the boat. Like, I really missed the boat.
Oh, it didn't fill, is what you're saying?
No. Yeah.
Oh, damn.
Like, I'm so pissed.
Yeah, no, it'll still pump. I mean, if you notice, every time the government takes a role in something, and especially when they do it off hours the next day, like if you look at Lithium Americas, for example, that doubled, the next day. Pretty much any of these that the government says, hey, we're taking a stake in it, you just see this frenzy of buying, and then right afterwards, usually there's a correction. But you might get a double in USAR. Like, you might get it right back up to around where its peak was in October, I think October 13th or something like that, right around where it's at its top.
Yeah.
But
oh my God, look at that.
Yeah.
It's crazy.
Yeah, so we'll probably see it launch back up to that. That's my guess, is that people will go, okay, it can at least go back to where it was now that there's government backing it. So I think even though you missed the boat, quote, so to speak, you still have quite the opportunity to pick up 20-30% gain or something on that right there, if you wanted to be in and out in a day kind of a thing.
Yeah. Victor Sank had put a comment in the channel. Hey guys, what do you think about CSE CCI looking for a potential grow in their copper field? So I don't know anything about CCI. Let's see if I can even pull it up. Well, there's Crown Cash. Yeah, this is definitely not the copper thing.
Yeah, it's Canadian exchange.
I don't have access to the Canadian exchange, unfortunately. So I mean, I have no thoughts on it. Victor, do you have any thoughts? You want to share any thoughts about it?
Well, no, because I don't know the ticker. I go over 1 million tickers, so when people list tickers, it actually kind of irritates me, because I'm like, no, I don't know that one. Just say the company name, and then that way I'll actually be able to have a comment on it or whatever, because tickers change too. I mean, company names change too, but a little bit less, I think, so, than people changing what their tickers are.
Nice.
But if
Nice.
I knew what the company was, maybe I could comment on it. I'm certainly bullish copper, and I'm bullish on Canadian plays as well. In fact, the majority of my port is Canadian.
It's
So
Canadian Copper. Canadian Copper is the company.
oh, Canadian Copper is the company. You know, actually, I don't know enough about Canadian Copper really to comment then. So I would say I would if I knew the company, but I don't know enough about them to comment. I do know quite a few Canadian copper companies, but in terms of the ones that have popped up on my radar, that's not one of them. Not to say it's not good, but it's just not one of the ones that has, you know, billionaires investing in it and are at all of these farms promoting their own stuff, kind of a thing. So maybe it's a sleeper play. I don't know enough about it though.
Yeah. I want to come to this because I think this is, again, just it's more government news, right? More macro stuff. But I highlighted that we're trying to add $1.2 trillion onto the damn balance sheet. And like, why not? Let's just print a little bit more. Why not? You know, I think the debt clock is, or the debt the United States has is at like 38 trillion, and it's probably closing in on 39. So, you know, 40 trillion, why not? Who cares? But this is for the Department of Homeland Security. So again, you know, everything that Tungsten Tiger was just talking about, you know, that the government just keeps on printing, right? Nothing's going to stop this train, as Lynn Alden likes to say. So we're just going to keep printing money, and that will be, you know, probably a bullish tailwind for something like gold, right? Something like gold, something I don't know about silver, because silver in my observation is more so you know, there's actual use for silver, like industrial use. It's not so much of a used as a store of value like gold is. And they call it, was it the GSR, the gold silver ratio, right? Where it's gold is what you're comparing it to. So again, just adding on to kind of what Victor was saying, Tungsten Tiger, excuse me, what he was just mentioning, you know, the United States just continues to print more and more money. If we have this government shutdown, I think this is also going to lead us into a very rocky start, I think, for February. And right now, for those who have been following, the S&P 500 is at this really important piece, or this important road. Let me just pull up SPY. I don't have technical charts for you guys, unfortunately, but it's been kind of trading, you know, flat, right? These last couple of months, it's just been kind of like trading flat. So it's coming up to this point where there could be a big breakdown to the downside, or we could probably rip higher. We'll know probably in the next week or so. So again, this right here could potentially be that catalyst that leads us there. Real quick, I want to talk to let's see. There was this comment here. If they offer a discount on stock, if you put everything in a 401k, you will gridlock your money. Most people don't want to work till 59 and a half. The match is good, but why put everything in a 401k? That is true. You know, well, at least for me, everyone's situation is going to be different. You know, for me, I had a 401k when I was working, you know, way back when. Now I don't have a 401k. I didn't want to lock my money up, but it was more so because I was a high earner. You know, there's some benefits with putting money into a 401k, right? So if you make, let's say, like 100,000 a year, right? Let's just say 100,000 a year, and you put in the max, whatever the max was for a 401k, right? If you want to reduce your tax consequences, what I was doing, all right, I'm not a CPA tax guy, but what I was doing was using that 401k to help offset the taxes, right? Because if I put in 20,000, then on paper to the government, to the IRS, I was actually making 80, right? So I'd only be taxed on that 80. Then, you know, of course, you stack in a bunch of other stuff to help bring that tax consequence down a little bit. But yeah, 401k made sense. Even if you don't make 100k, you know, depending on what your life is like, you know, where you plan to be, you know, do you plan to work? Are you passionate about your job, et cetera? All these questions, you know, 401k could make sense. For me, I ended up cashing out of my 401k and then YOLOing it into high yield ETFs, right? Which was a total mistake, but hey, it is what it is. Now I still, you know, I ended up taking it out, because I didn't want that money locked up, right? I just didn't want that money locked up. I felt like I could do better with it, and that's what I ended up doing. I ended up taking it out, combining it with my regular brokerage account, and just basically investing in money in that way. So that's pretty much been why I don't do it, or why I don't have a 401k anymore. I'm not saying that a 401k is bad. No one does want to work till 59 and a half. Everyone wants to go out and live, financially free, financial independence, and all that good stuff. Myself, I had that bug, that itch, right? I live out here in Thailand. I've worked basically my butt off for the last eight plus years, and I get to enjoy the fruits of that labor. But again, like I wasn't discounting how important a 401k was, because if I stayed at that job, if I stayed in the workforce, if I wanted to continue in the workforce, I could keep that 401k. It's just life took a different turn for me. But also just want to put this out there. And again, I'm not a CPA tax person, but if you're an entrepreneur, right? Let's say you leave the workforce and you're an entrepreneur, you have your own business, and you open up a solo 401k, which increases the limits of what you can have. Is there a potential that you can move that 401k into the solo 401k, right? Where you are self-managing? There's also that. There's also benefits out there that are coming online. You can invest. Well, the Trump administration is working on allowing 401ks to invest in, private equity or other assets like crypto, like Bitcoin. Before that, you could take a loan against your 401k, invest in real estate, or buy a home, right? Not invest in real estate, but buy a home. You could also now, or what was it? So there was that. You could also take a loan against your 401k, right? So I saw some people doing that exact thing, where they would take a loan against their 401k, invest it in some asset, right? That would not only pay back the loan, but also they would come out ahead, right? So there is ways you can use and access your 401k. Of course, none of this is financial advice, yada, yada, yada. It's just some things I have seen on the internet, right? Some things I've seen just, browsing the cesspool that is Reddit. Okay. But yeah, I just wanted to cover that because I think that is important. And I think especially for people new to finance, I don't think you should discount a 401k. I think it really depends on where you want to be, right? And if worst case scenario happens, let's say you leave the workforce, you don't, you've reached financial independence, well, cash it out then. You can cash it out, you'll pay the taxes on it, and then, you can ride off into the sunset. So it doesn't mean that the money is locked in a 401k forever or until you're 59 and a half. I mean, you can just take it out, but there will be a hefty tax penalty. All right. So just wanted to cover that. Let's see. Yeah. So damn, I talked a lot. Let's see. Just moving on here. Tasha, is there anything you want to kind of show or because I think you should be able to share your screen if you want to. You don't have to, but if you want to share your screen for anything, just let me know.
I don't think there's anything screen wise to share, at least not on this laptop. I got all my other stuff on my other laptop.
Oh, okay. You're a two laptop kind of guy.
Yeah. One for travel, one to, get beat up, and then one to stay at home pretty much. One for, where I carry around all my secure stuff, and that doesn't go out and about in public because I don't want anybody's Bluetooth to be like, oh, okay, I can just pick up whatever's on your laptop kind of a thing. There's too much of that out there. I've seen so many things where, people are walking up next to somebody with a cell phone and then just boop, boop, and stealing information. And I'm like, oh, damn. Okay. I need to not have any of my account information or anything like that in public areas. So I just made sure I have one restricted at home that has all my stuff. So
you know what's crazy is like when I was working in the Middle East on this base, they the local sellers, right? The local sellers, there's this big investigation that happened because a lot of soldiers and contract, a lot of civilians, everybody, right? They just kept getting these random charges, right? They're like, what the hell's going on? So the investigation found out that these guys were running a skimming scam. Basically what they do is they come right next to you because you're like looking at the like whatever the goods are, right? You're just looking at stuff, and they'd come right next to you and be like, hey, can I help you? But they had a device in their pocket that would basically skim or RFID your credit cards, right? They would just start taking all the information and start charging you for it. And I was like, that was insane. So I have a wallet. I don't have it with me right now, but I have a wallet that has that, like, that sleeve or whatever, that protection for credit cards, so that people can't skim. I always thought it was like kind of a fad, maybe not a fad, but kind of like, boogeyman, just scaring you thing. But yeah, this thing really happened. And
man, they can just get the data from your phone, and they can just look for anomalies like 16-digit number. You go, oh, okay, that's probably a credit card. So they can be able to just, without even, like, so many people think, oh, they're not going to be able to steal my account. It's like, no, they just get raw data, and they'll figure out a way to go ahead and get you if you have that information that's been plugged into your phone at a given point in time. They go, oh, this is interesting. This looks like this could be a PIN number for something. And then boom, they've got, one credit card right there. And you're ending up having to dispute with your credit card carrier, for a month of like, hey man, I wasn't in Thailand buying this shit. All right.
Victor had asked, what about Victor Sank had asked, what about aluminum stocks, or would you guys go into broad index metals? Me personally, I'm not looking at the miners, just because I don't have that. That's not my wheelhouse. That's not my core competency. So the amount of research that will go into how miners actually work and everything, it's a lot. So for me personally, I went into a broad-based ETF. I'll throw out a couple, ideas out there. Again, don't buy it just because I'm mentioning it. Do your own research, of course, but pick, is probably something you could look into, and see what companies are in there and what they're doing. There's also metal. All right. This one is also not too bad. This is one that I actually do have a position in, full disclosure. So this, again, could be a decent one. Again, you got to do your own research. Now, for anything that's aluminum specific, I personally don't have anything for that. Again, my approach to the metals trade right now, or the commodities trade, whatever you want to call it, the super cycle, right, is I'm just going to buy broad baskets of miners, GDX, SIL, METL, as kind of like just some ideas. But yes, I'm buying broad baskets because I don't have that core competency yet to do the due diligence, or the time really to do the due diligence on each of these mining companies. Even though, like, I speak to Victor, and he probably, he spends, 30 hours a day, going through this stuff. It could be time intensive. There's a lot that goes into it. You're not just looking, at their investor presentation deck, right? Or if they even have one. You have to look at what goes into a mining operation, what kind of machinery, how close it is, where is it at, geopolitics stuff, policy stuff. Do they have the permits to do it? How long does it take to get the permits?
The most important thing is the management to me. Like, yeah, granted, it's easy. You have to have good geology, right? The rocks have to be there for you to mine them, but that's not difficult to be able to determine that there can be deposits in certain areas. Like, you can determine it by flying over an area, right? There's copper deposits there. Why? Because you can see everything's dead on the ground and it's bright orange. It's like, it's a little bit of a giveaway for that kind of a thing. But to touch on aluminum, there are two aluminum companies that I do like, Century Aluminum and Alcoa. There are other ones out there, but those are kind of like the top two in the aluminum picks. And if you look at Alcoa over the past 6 months, it's up probably 100%, I think. It was at like $33, and then it's up around 60 something. So it's had an amazing appreciation to it. And it will probably continue to do well. All of the base metals are starting to break out. Like, we're seeing tin has had a real big run up recently. We've seen some of the other base metals also kind of break out to new highs. So Aluminum, I still think is a pretty good bet. There's a lot of aluminum recycling that will happen eventually later on down the line. So I don't know in terms of price effect later how that's going to be. But if you were to try and do individual picks, I think one of those two companies is probably good. So you've got, Alcoa and then Century Aluminum, CENX for the ticker, and AA.
CNX. Oh, there it goes. Look at this. Look at this. I hope the viewers are paying attention. Like, I really hope the viewers are looking at this stuff, because you just dropped 2 gems, took away probably a ton of time to do the due diligence.
Yeah, I already did it for you. Don't worry.
And you just dropped 2 absolute gems. And oh God, look at that. Look at that. What the hell?
And that's where it can go back to. Right. If we like to use history as a bit of a gauge in times where things weren't good and these industries took off, we realized, hey, the hard commodity itself is actually really of value. Right. We've gone between these pendulum swings of speculation of value and then really wanting to actually touch the damn thing of value. And it's those where I think we're more towards that time of really wanting hard asset value, or being able to know, hey, aluminum's a real thing and we need it. We need it if we want any type of canned food. Like, it's like, if you think, well, it's pretty important to have food and to preserve it. So aluminum, yeah, we need it.
Man, that's crazy. And I know we spoke about this briefly, but aluminum is also used in power, or used for energy transfer and things like that. Is that correct?
Yeah. So that's exactly what I was asking about, because I was talking to my friend who's electrician, and we just discussed, like, actually, if we talk about power need for everybody, that power needs to be transferred somehow. And most of the wires for the power transfer are like aluminum. All the automotive production, all the future cars, most likely will be built out of aluminum, because cars made of steel are not that common anymore. And me as a mechanic, I can confirm it to you. Obviously, some heavy duty stuff is still just steel, but all modern automotive, which gonna become an autonomous soon, gonna consume more and more aluminum. And other like metals, I would ask about other metals that would be used in the batteries. What do you think what would be those metals or materials that would come in future batteries? Thank you.
Yeah, that is definitely the area where I spend my time. So if you're talking about, like, Eric Sprott was just going over manganese and the future importance of manganese, there's also which side you're talking about, whether it's the anode side or the cathode side of the battery, if you're wanting to focus on. So there's lots of things, whether it's purified phosphates, PPAs, and the extraction process, like, needed for those, what's going to be needed for lithium. Yeah, there's a lot of different areas where you can focus on in battery battery metals. Manganese is certainly one of the ones that's popped up in interest. If you look at companies like Euro Manganese over the past, I think, 2 trading days, it's up almost 70% or something. But those are like penny stocks. But yeah, manganese is probably going to have a future significant role. Scandium is probably going to have a future significant role in that, but that's more of like a 6G operation for wireless stuff, not so much for automotive, I believe. But yeah, the amount of metals that go into, if we are talking about going into EV vehicles, which I think it's not going to be nearly as much of an adoption as people think. I think more so hybrids are going to be the way for a while, just simply because the amount of required materials. I wish I did have the infographic for it, because it shows what a traditional combustion engine car uses for rare earth minerals, and then what a EV vehicle uses, and it is astronomical, the amount of mining and other metals required in order to be able to actually make fully functioning EV vehicles en masse.
Insane. Absolutely insane. And man, that's so crazy. The because going back to the car thing, like I remember when, cause my first car had an iron block, and then I like my family and I had a few friends who are also mechanics, and they were saying like pre 95, most cars had iron blocks, or at least the more luxurious cars did. Definitely, like, you know, Mercedes-Benz, BMW, etc. And then everyone started shifting away from iron block to aluminum because they were lighter on the car. Man, it's crazy now that, especially with EVs, like how much metals are going to go into them, how much more specialty metals, not just, you know, aluminum or you know, steel, but because of all the electronics that are going into these things. It's just, man, this is such a great time to be alive. Like, there's so much money to be made out there in the stock market. Like, I, again, did not really know anything about metals until up until recently, of course. So, but anyways, guys, I think this is going to come to an end on the stream. We've been streaming for about 1 hour and 10 minutes. I actually have to get going, and I think I'm going to do these streams more than often than not. I might even include segments like this going forward in the regular show Monday to Friday, instead of just keeping it for like a coffee hour on a Sunday. I don't know. I'm kind of toying around with everything. But Victor and Tungsten Tiger, I do appreciate you guys joining the stream. Dividend Sith, I'm not sure if you're still around, but I appreciate you joining the stream. With that being said, guys, you guys have a wonderful evening. All right, wherever you are in the world, I really do appreciate you guys coming in and cutting it up with me, and you know, kind of just setting up for the week. So outside of that, you guys have a great night, and I will see you all in the next stream. All right.
Thank you so much.
Take care.
Thank you. Thank you.